The Nasdaq Rebalance, everything you need to know.
Yep. So we'll get into it. I also linked the article that I wrote in the chat here, and it'll be on these slides in the archive. And you can find it on our blog site, our Market News and Insights. So we're talking about the rebalance here. The Nasdaq announced a special rebalance of the index due to the over-concentration of specific stocks in the index. This was announced, I believe, on Friday of last week, if I forget the specific day, but this was a special circumstance, right? So this goes into effect on July 24th, which is 2 weeks roughly from now, 2 weeks from yesterday. Normally, and I say that this is a special one because normally you rebalance every quarter, so you have a rebalance in March and June and September and December. All the major indices do this. You rebalance and change, not really change the weightings of the stock, but you make sure all the weightings are within parameters. And in this case, we've had such a significant move that there has to be a little bit of a rebalance here. This one does not include any additions or subtractions. So a lot of times, I know the S&P 500 had Pan W a couple months ago, getting added to the S&P 500. So a lot of times the rebalance happens in addition to a adding of a stock to the index or a subtraction or both. So this one specifically does not have anything going into the Nasdaq. It does not have anything coming out of the Nasdaq. It's just a change in the weighting. The main reason behind this whole rebalance is that the top 5 stocks in the index must not exceed 38.5% of the total weighting. And so that comes from the Nasdaq document, which is linked in the article that I wrote, so you can see that. Currently, the top 5 stocks have around a 55.4% weighting in the Nasdaq index. So you've got Microsoft up there at number 1 at 12.89%, Apple at 12.45%. You have Alphabet, Google, which we know it as. Both of them together account for about 7.37%, Nvidia at 7.03%, and Amazon at 6.87%. So this grouping is more than half of the total weighting of the Nasdaq, which exceeds the parameters. And so what you have to do is rebalance and move some of that capital into some of the other stocks, more down the list. And if we jump to the next slide, just to give you an idea of the weighting here, here's the top 15 holdings. This comes from etfdb.com. It's a great site if you want to see weightings for not only the Nasdaq or the S&P 500, but all of the other smaller ETFs. You can pull up XLK and XLP. All those are on there. But you can see here it's very heavily weighted towards the top, in the top 10 when you include Tesla and Meta and Broadcom as well, and even Pepsi and Costco. When you get into the top 10, it's a lot. You're talking about the mid 65-ish% in the top 10. So it's definitely heavily weighted towards the top, and even more heavily weighted towards those top 5 stocks, which includes Google there. You can see the weightings are less than Tesla, but combined, it makes it into the top 5.
Yeah, I think when you look at this list, I think the surprising ones might be something like AMD, Netflix, Adobe, Costco, where they're only a mere 1.5%-ish. And then you have the top 2, Microsoft, Apple, at 10 times the amount of that weighting. So pretty interesting distribution, to be sure.
Yep. So jumping on to the last slide here, just a couple things to keep in mind about this whole situation and about the rebalancing as a whole. So I've had emails and tweets and DMs about what will happen, and the short answer is, nobody knows what's going to happen, and this is a news event that has now been digested. The official rebalancing percentages, so when we will find out how everything will change, right? Because we know that around 8% has to come out of the top 5. It's not linear in terms of each one gets adjusted by the same amount. They can choose to move it how they see fit. So We'll get that information on Friday, July 14th, which is this coming Friday. That information may not come out right before the open. It might be after the close. It's going to be sometime on Friday, so we'll be trading on that new news on Monday, on the following Monday, and through that week, which is the last week until it is fully rebalanced for first trade on July 24th. Through that week is when they'll rebalance. It's not done right at the market open or anything like that. It's they rebalance throughout the days leading up to the 24th, which is when it'll all be officially done and everything will be settled and rebalanced and done with. This will not have any effect on any of the options prices or expirations or anything like that. All the options will remain the same. There's no adjustment to the Qs or nothing like that. It's the same notional value being put into the ETF. Like it's all the same. So it's just a matter of what happens between now and then, which you can form your own assumption on. And the event is obviously priced into the options. The Nasdaq volatility is typically higher than everything else, but it has, you've seen some weakness in the Nasdaq itself, as well as some of those big name stocks, which is kind of what I wrote about in the article as well. You see the weakness in Apple and Microsoft and Nvidia and Google over the last couple trading sessions. A lot of people will equate that to the suggestion that the short-term selling of these stocks, because we know that something is coming out of those underlyings. Maybe you're trying to front run that, or you're front running all the other products that track these indices, like mutual funds and hedge funds that have to peg themselves to a specific market. So a lot of times a mutual fund will be a tech focused mutual fund. It'll compare itself to the Nasdaq. A lot of those funds have to do their rebalancing as well. So it's a question of is this a buy the rumor, sell the news, or sell the news, buy the rumor type thing? It's a hard question to answer. It does suggest, though, that you do see a little bit of pressure on some of those big stocks, just because they will, likely have some sort of selling of those shares just due to this. So there's no guaranteed price change up or down. I had one question asking me, just because of the changing in the weighting, does it mean that the ETF itself is going to go down 8% because we have to rebalance by 8%? That is not the case. There's no guarantee in anything trading, let alone this event that's coming up. And just keep in mind that the Nasdaq as a whole is much smaller than the S&P 500. So, when you have a stock being included or removed from the S&P 500, it's a big deal, because the S&P 500 is a much larger product. There's a lot more, mutual funds and hedge funds and all that stuff that peg themselves to the S&P 500. So that in itself is a lot bigger of an event than what the Nasdaq rebalances could turn out to be. A big old nothing burger. It could be, a buy the dip opportunity. It could be a sell the rip opportunity. I wish I knew. I wish I could see into the future. So check out my article there, tastylive.com/news and insights. You can see the link right there, and it's linked in the YouTube chat, and it's on our blog. So check it out. I'll update it on Friday as well when we get more info on that rebalancing, and then go from there.
Lovely. And in terms of the Qs themselves, I think it's interesting to see kind of a slightly heightened implied volatility this week relative to next. So you're seeing 23%, 21, 21 all the way through Friday, and then it drops to 17. And if you look at the expected moves for the 3-day, 6-day, $5 expected move for the 3-day, $5.85 move for 6 days. So if you're trying to trade this, I think there is some heightened implied volatility in the weekly cycle, like selling the 3-day and then buying anything after that, like a diagonal spread, calendar spread. If you're just trying to take the IV out of it, could be something interesting there. But like Nick said, no guaranteed up or down. I think it will be interesting to see how they rebalance, though. And I think I think you might see some more chop and action in the products that they give weighting to rather than take away from. Because maybe there's some surprises where they're like, we're putting more weighting on this product, like maybe AMD, for example, and then they explain why, and then you see more volatility, more volume, more action in that product going forward.
The second part of the requirements for the index is that any stock outside of the top 5 can't have more than 4.4% weighting. So Tesla has 4.49%, so there might be a little bit of some coming out of that. But just to keep that in mind, that it's not going to be like they're suddenly going to put big chunk in any of those stocks outside of the top 5. It's going to be evenly distributed. You might see 0.1% added to, whatever stock, AMD, 0.1% to AVGO, stuff like that. So it's going to be, and at that amount, it's a negligible. We're talking about a market that does, there's like $500 billion of SPX notional that expires every single day. A little nothing burger in Nasdaq rebalancing.
Yeah, we shall see.